Let's Talk Money.
Welcome back. You're with us on Let's Talk Money, and it's a hot subject we're discussing this week, the change in transaction charges as mandated by market regulator Sebi, and what that means when you're looking at buying or selling stocks directly. So, of course, we've had three brokers on the panel today giving us their views. Ashish Rathi of HDFC Securities, Shripal Shah of Kotak, and, of course, Jimeet of SAMCO. I want to pick up one question. It kind of sort of symbolizes the feeling right now, or the mood right now. And this question is coming in from someone whose handle says Stocks Mentor. And Stocks Mentor is saying that if zero brokerage model is disappearing, then why should traders stick with discount brokers at all? And I think we'll spend the next couple of days, I think, debating and getting to the answers here. But Jimeet, your sense, and this brings us to the wider issue of huge rise in retail volumes in F&O, right? You think it had a lot to do with the fact that there was this whole culture of zero brokerage that was building up, and what are we in for now?
So I think when you typically talk about zero brokerage, I think when the industry evolved over the past 10-15 years, the industry, what it meant to say was we're going to charge 0% brokerage, because the tradition in the 2000 to 2010-15 was about you get charged as a percentage of your volumes. Now, zero brokerage typically ends up meaning that you don't pay anything as a percentage of your turnover, but you pay a flat fee per order. So you pay $20 per order or $10 or whatever that price may be, let's say in the F&O segment. Now, whether a customer chooses a discount broker or a full service broker, he'll have to do the cost analysis. I think there is a segment of the market that still operates and charges a customer on a per lot basis. So let's say if you're trading one lot, you get charged $10. If you're trading two lots, you get charged as a multiple of 10. Whereas discount brokers offer a flat rate that irrespective, even if you're trading 50 lots, you still end up paying $20 per order. So I think the customer, for his style of trading or investing, will have to do that cost benefit analysis. And we believe that the plain vanilla discount brokers, which typically offer execution-only services, and where a customer is only looking for execution-only services, there is still going to be a lot of saving that a customer will end up getting by virtue of being on a discount broking platform. On the contrary, if a customer is looking for a larger service pool, for example, he's looking for research,
advisory,
etc., he may still want to stick to a full service broker. Yeah. So I think, as my other panelists said, I think this is a competitive industry. I think everybody builds a certain suite of services, prices for a certain suite of services, and customers in this industry are smart enough to make a decision on what's right and what's wrong. And so I don't think that this trend of traders and investors and the access to the markets that they've got since COVID, that is reversing anytime. I think that trend is actually going to get accelerated because of the increasing transparency in the markets.
Sure. Let me get in, Mr. Shah. Mr. Shah, you was speaking about how brokers end up offsetting, and I think Nitin Kamath in his tweet also mentioned that the revenue that brokers were getting from the F&O segment, that was being used to subsidize traders who want to be only in cash equities, right? Is that going to change now?
Yeah, so this looks like a scenario where some of the discount brokers were offering zero brokerage on the delivery trades, and they were charging per order fees on the derivative trades as well as intraday cash trades. Now, to compensate these, there are two ways broker can raise the brokerage. Either broker can increase the charges for the derivative, which is currently being charged, or broker can actually look at removing the zero fees on delivery and increasing that to equal to, say, derivative. Both possibilities are there depending on what is the actual impact on a particular broker. Broker may decide to choose either of these pricing model.
Okay, fair enough. I think we just, as clients, we have to be really aware and watch this space to figure out what's happening across different brokerage houses and what suits your interests. But Ashish, coming down to last thoughts now, I think in all of this, let me bring in the wider debate about why is there such a huge surge in F&O volumes? And the regulator's been very concerned about it. We keep hearing noises here and there around the fact that is this too much speculation? Is it too much satta? And is it right or wrong? So do you see this in any way linked? And do you see any impact on overall F&O volumes, retail F&O volumes, which have absolutely surged? We'll put up some numbers as well. I mean, those numbers have absolutely blasted in the last 3 years since COVID, right?
So, factually, it's a correct statement wherein F&O volumes have gone upsurged a lot, and you will see a lot of these Gen Zs getting into F&O, which is, I think, a real cause of concern for the regulator. So, if a learned person gets into F&O, they are obviously okay with it. But however, we are seeing a lot of people not having the skill set to understand F&O getting into. And yes, the regulator has a concern. Yes, pricing also has played an important role, but the platforms have also played an equally important role. Because while they made the platforms to make it easier for customers to trade, so that is also equally important. I think so, all in all, it's a combination of pricing and the platform and the ease of transaction which is being made available. And plus, a lot of these, I mean, everyone is on social media, a lot of reels on F&O trading and some, I think so you can say false claims of I made this much of profit. So the younger generation quite possibly gets influenced by all these things. So there is definitely some concern by the regulator on the F&O volume. And let's see how it works out. Maybe this is the first step, you can say, baby steps into seeing to it that some charges increase on F&O. Maybe what Shripal said, one of the positions could be increase the charges on F&O. And let's see, there are a lot of media articles already on F&O trading.
And we're moving to the budget, so you never know, anything's possible, right? We're in that kind of an environment. But gentlemen, thank you very much. This has been a very, very helpful conversation to at least understand this one step that the regulator has taken with respect to transaction charges. We hope, viewers, that you found this useful and that it gives you some clarity. And then you can actually go back, do your own homework research, because remember, over the course of the next couple of months, these charges will be levied. And then you can figure out what kind of a cost model really suits you. For now, it's a wrap. Thank you to all my panelists for joining in as well. Thanks very much. It's a wrap on this edition of Let's Talk Money. Keep sending us your feedback, queries and comments. We'll see you again with another theme next week.
Let's Talk Money